Wednesday, September 11th, 2024, Monaco 64, home of alternative economics and contrarian views. We're going to look at the U.S. banking sector, Wall Street in particular, and the yen carry trade unwind. We spoke about this, of course, in detail just over a month ago. We've been speaking about the yen carry trade for years. I've got a playlist if you want to go through it. I'm going to put it up here in the cards. Suffice it to say, the yen carry trade is one of the pillars, in my opinion, of all the liquidity in the system and the everything bubble that we've had for about 40 years. And the yen carry trade has been really important in the last 30 years, I would say. So we're going to look at what are the main indicators to keep you abreast and to give you warning signs about this yen carry trade, because if it unwinds, of course, liquidity dries up in the whole financial system, not just in Japan, but all around the world. And I think, we could be headed for trouble in the next month or so. And I'll tell you why. Before I do, just wanted to look at some of the headlines here. And one that came out a few days ago, and I hadn't seen it, well, a couple of days ago, and it's from the Southern China Morning Post, I think. Yeah, and it says, Saudi Arabia open to petro-yuan, closer China ties, minister says. Saudi Arabia's Minister of Industry says country willing to try new things in relationship with China. Chinese companies welcome. I think that's very significant. It's just another chipping away of the power of the petrodollar. And I'm not surprised President Trump or candidate Trump spoke about this a few days ago, that they're going to punish countries that don't use the dollar. I think he's got China and Saudi Arabia in mind. We all know that after Nixon closed the gold window in 1971, the petrodollar really is what has been giving the dollar its strength. Demand for the dollar is a must if you want to buy oil anywhere around the world. And in terms of the UK, which is where I am, just wanted to give my viewers here and also all around the world, because the UK economy is kind of linked closely to the US economy. And we had some data this morning. They're very weak, especially the industrial production, manufacturing production, and construction data. They all came out in the red, a lot lower than expected. And we also had GDP data that came out for July. It was expected to rise 1.2% year on year, GDP in July, or 1.4, excuse me, and it rose by 1.2. It's not a good number, people, 1.2% GDP growth. Considering the government spends so much, is not a good number. And month on month GDP was flat, 0. So back to the Japanese yen carry trade. And on the 5th of August, of course, you probably remember, it was a pretty significant day. The Nikkei dropped 13.5% or thereabouts. Today we had another pretty big drop in the Nikkei, not as big as that one, but it was 600 points. And why is that happening? Well, because the Japanese yen has remained relatively weak since the beginning of 2013, when Prime Minister Abe instituted Abenomics. And what is Abenomics? Well, it's simply a policy of very high fiscal spending, a lot of money printing, and keeping the currency really weak in order to boost Japanese exports. And the Bank of Japan played right along with this, kept rates at negative. And what that did is that encouraged investors from all around the world, and Japan included, to borrow in yen because it costs nothing, or even you get paid sometimes to borrow in yen. And the currency weakened as well. We went from around 80 yen in 2013 up until recently. It kept weakening. The dollar kept going up. It went above 160 by July this year, which was a 34-year high. But you can't keep that going, or else you destroy the yen. Not that it hasn't been destroyed already, but they had to do something. So the Bank of Japan started raising rates, while the rest of the world now is going to cut rates. So they're in a bind. But what that did is that strengthened the yen massively and created a lot of volatility in the hard currencies, which are basically the currencies in the dollar index, which are not supposed to move around like a tech stock or very risky asset. So the dollar dropped from above 160 to around 141 from July to the middle of August. And the markets were really in trouble at the time, especially the Nikkei. The NASDAQ on August 5th, that was a Monday, was down 1,200 points in the pre-market, in the futures. But then things calmed down. The dollar picked up, but we were unable to break through this trend line here, back up above this trend line. And we formed a classical kind of bear flag. And now it looks like the dollar is weakening again. It's creating problems. And aside from that, it seems like in the US, the banking sector is in trouble right now. And I think it has a bit to do with the yen carry trade. And you might ask, what do you mean? Well, the problem with Wall Street, City of London, and the big banks is whenever they do something like the yen carry trade, which is kind of like an arbitrage between interest rates and foreign exchange, they do it in spades. They leverage to the hilt because of the greed. And it seems like it's a sure bet. But when things turn, that leverage comes home to roost, and it can hurt these financial institutions' balance sheets. And I would say that the big Wall Street banks like Goldman Sachs, JP Morgan, Citibank, Wells Fargo, Bank of America, they're heavily involved in providing liquidity for the speculators, investors like hedge funds, private equity, to abuse this Japanese yen carry trade. And it's interesting that yesterday, intraday, as you see here, all the big American banks were deeply in the red. JP Morgan was down 7%, finished down 5%. So I'm wondering here if it's starting, the yen carry trade is starting to hurt Wall Street. And the other thing I think that's hurting Wall Street that we need to think about is the consumer, U.S. consumer, especially the bottom 90%, I would say, and 50%. Yeah, they're starting to hurt. And I think one of the signals that points to the consumer being on skating on thin ice, so to speak, in the U.S. is the fact that Warren Buffett sold billions of dollars or dumped a lot of his Bank of America stock. Bank of America is heavily involved in the consumer sector, and I haven't heard anyone talk about that, but I think that's what's going on. So there's not just the yen carry trade, but also the economy. What's the fight back for the monetary authorities, i.e. the Fed and other central banks? Well, it's the only thing they know how to do, provide liquidity to print money. Yeah, they have programs that they name, like they call them something or another, but in the end of the day is money printing. And it's interesting that it's been 18 months since we had the regional banking crisis, Silicon Valley Bank, back in March of 2023. And it reminds me of the subprime debacle, 07. It started early 07 and culminated in September, October of 08 with the collapse of Lehman. Could it be that the U.S. banking crisis isn't over yet and now it's going to spill over into the big Wall Street banks? It's possible. Back in March 2023, the big banks were okay because a lot of depositors in the smaller regional banks were shifting their deposits into the big Wall Street banks for safety, especially banks like JP Morgan. And I found it interesting back in August, in the beginning of August, when the carry trade was kicking off, that a lot of the Wall Street banks and JP Morgan in particular were trying to say, well, the carry trade has been half unwound. There's still half of it to be unwound. And I thought that was strange because at the time I thought, how can JP Morgan know how much the world is exposed to the carry trade? They might know how much their clients are exposed, but you can do a carry trade anywhere in the world as long as you have access to the foreign exchange market. So I thought that was weird. Was JP Morgan trying to calm the market down to say, well, half of it is done, don't worry? That made me suspicious. And the fact that Wall Street and the banks were in trouble yesterday, and the yen has made a new high overnight. We traded, as you can see here below, the August 5th low. The dollar yen went down to 140.73. My target for it is around 125, and it could happen before the end of October or even before the end of September, I would say. It all depends on how things go in terms of volatility. But right now, the dollar is down 0.75% versus the yen. And the other interesting thing is that Goldman Sachs didn't have a very good day yesterday. As you can see here, it was down almost 5% at one point. I saw someone post this on X or Twitter. The Coastal Journal said Goldman Sachs was the Wall Street bank that got blown up in the yen carry trade as they expected the yen to be over 150, while they expected the dollar to be remain strong and the yen carry trade to remain stable, so that people don't unwind. And what happens when things unwind? Well, people buy back the yen, and they have to buy it back. And if they make a loss because they borrowed or sold it at a lower price, they need to liquidate a lot of the risk assets that they bought with those proceeds of yen to cover their losses. Plus, they don't have that yen to finance that anymore. So this is speculation here, but there's research done in May of 2024, May 22nd, and Goldman Sachs said the Japanese yen will likely remain weak for months to come. So they were expecting the dollar to remain fairly strong up until early next year, and it's going completely the wrong way. So Goldman Sachs, JP Morgan, I think they might be in trouble. I'm not saying they are, but we need to keep an eye on this. With all of that, with all the troubles that seem to be out there, gold is within a whisker of a new all-time high. We touched 25.29 overnight. The all-time high is still 25, just around 25.32. So we're very close to a new all-time high. I expect silver actually to kind of lead the way, even though it's still undervalued here. We are up 1.5% overnight here, and we're just below 29. Or maybe gold will this time drag silver with it, which is not something that usually happens. But I think silver is probably the best place to be in the precious metals. Does that mean I'm going to sell my gold and buy silver? No, I would just favor more the silver sector. I still believe physical gold and silver is a very good foundation, and I'm not here to try to sell gold and silver. Some people think I am. I never started this channel to do that. The only reason I have my affiliates is that people over the years have asked me, where can I buy gold and silver? And I've given them the option to look at my affiliates, which are below in the description. They're reputable dealers in the UK and in the US. So I'll stop at that. I'll quickly go through where the markets are this morning. It's 8:06 a.m. London time. Yeah, the high in gold overnight has been 25.29. The low has been 13, and right now we're at 25.25. Silver is right near the highs of 28.85. We're at 80. What about the stock market? Because the stock markets suffered quite a bit back in the beginning of August. Well, right now the Dow futures is down 100 points. It was down about 200 earlier on, so not that bad. The NASDAQ is only down about 55. It was down about 150. So things have calmed down. They're still pretty calm, but I think we need to keep an eye on the dollar yen. The lower that number goes, the worse it is for the health of the financial system. And before we wrap up, just have a quick look at the Treasury yield curve. Well, the 2-year yield is continuing to drop quite a bit here. We're down 5 basis points, which is quite a bit overnight. We're at 356. So bond market investors are telling the Fed, you're way behind the curve. You need to cut rates. The 10 years at 362. So yeah, we've remained uninverted. And yes, with that, I'm going to wish you all a very good day. Take care. Bye.